Hello traders, and welcome back to Explain the Charts. Today is October 14th, 2025, and we are looking at an absolutely historic moment for gold, XAUUSD. The price has been on a tear, breaking record after record, and there's a whirlwind of news driving this monumental surge. Let's first get into the fundamental drivers, because the headlines right now are intense. Gold is seeing extremely high demand as a safe haven asset, primarily due to a confluence of major risk events. First, we have an ongoing U.S. federal government shutdown, which is creating significant economic uncertainty. On top of that, U.S.-China trade tensions have dramatically reignited. Reports indicate U.S. President Donald Trump is set to impose fresh 100% tariffs on Chinese imports starting November 1st, stoking fears of a full-blown trade war. This has sent investors flocking away from riskier assets and into the perceived safety of gold. The U.S. dollar is also weakening, which is typically inversely correlated with gold's price. A major factor here is the market's expectation of Federal Reserve interest rate cuts. The CME FedWatch tool shows traders are pricing in a nearly 97% probability of a rate cut this month, in October, and a 92% chance of another cut in December. Lower interest rates decrease the opportunity cost of holding non-yielding assets like gold, making it more attractive. Fed Chair Jerome Powell's recent comments have also fueled this sentiment, highlighting downside risks in the labor market and acknowledging that tariffs could lead to persistent inflation. This combination of geopolitical tension, economic instability, and dovish central bank policy has created a perfect storm for a bullish gold market. Analysts are taking note, with Goldman Sachs reportedly raising their 2026 gold target to an astonishing $4,900. We've seen gold smash through the psychological $4,000 barrier, and just yesterday, it hit a fresh record high near $4,180. Now, let's turn to the charts to see how this incredible story is reflected in the price action. Looking at the daily chart, the long-term trend is undeniably bullish. We can see a powerful upward channel that has been in place since mid-2024, when the price was trading down in the $2300s. The ascent has been steep and consistent, with pullbacks being relatively shallow and quickly bought up. But let's zoom in on the most recent and arguably most important phase of this rally, starting from September of this year. This is where the fundamental news we just discussed really began to ignite the price. You can see the price consolidating in early September around the $3,500 to $3,600 level. Then, as headlines about the trade war and potential Fed cuts intensified, we saw a massive leg up. The price broke through the $3,800 resistance and didn't look back. Notice the series of large, bullish candles throughout late September and into October. This signifies overwhelming buying pressure and a lack of sellers. The key breakout happened right as we crossed the $4,000 mark. Yesterday's candle, for October 13th, was a monster, gaining 2.3% and closing strong near $4,128. This is a powerful confirmation that the breakout is real and that bulls are firmly in control. There is virtually no overhead resistance on this chart, as we are in price discovery mode at new all-time highs. Now, let's drill down to the 15-minute chart to see the intraday action from yesterday, October 13th. This gives us a clearer picture of the sentiment during the trading day. The day began with the price already elevated, opening around the $4,027 level. What followed was a relentless grind higher throughout the entire day. We can see a clear pattern of higher highs and higher lows, a classic definition of a strong uptrend. Every minor dip was met with immediate buying interest, preventing any significant pullback. Analysts identified an intraday support level around $4,090, and you can see here that once the price cleared that level, it never returned. The momentum accelerated significantly in the final hours of the day. Look at this powerful surge from around 41.15 to over 4,130 right at the end of the session. This indicates that traders were not taking profits into the close, but were instead adding to positions, expecting further upside. The short-term price action is extremely bullish and shows no signs of reversal at this moment. Switching back to the daily chart, let's talk about what to look for and where we might be headed. The bullish case is exceptionally strong right now. The fundamental narrative fully supports higher prices, and the technical picture confirms it with a clean breakout. As we are in uncharted territory, resistance levels are purely psychological or based on projections. The recent high around $4,180 is the first level to watch, followed by the major psychological barrier at $4,200. A clean break above $4,200 could trigger another wave of buying. On the support side, the landscape has now changed. The previous resistance zone between $4,000 and $4,050 should now act as the first major area of support. For the bullish trend to remain intact, we want to see the price hold firmly above this level on any pullback. A more minor, intraday support level sits around $4,090, as we saw on the 15-minute chart. Deeper support can be found near the $3,850 to $3,900 area, which was a prior consolidation zone. So, what is the bearish case? In the short term, it's very weak, but we can't ignore it. The primary bearish argument is that the market is extremely overbought. Such parabolic moves are often followed by sharp corrections as traders take profits. Any sudden positive news, like an unexpected resolution to the trade war or the government shutdown, could trigger this. A break below $4,000 would be the first major warning sign for bulls and could signal a deeper correction. So, let's recap the key levels and potential scenarios. Immediate resistance is at $4,180 and then $4,200. Key support is now the $4,000 to $4,050 zone. Our most likely scenario, with about an 80% probability, is that the bullish momentum continues. We may see some consolidation above $4,100, but the path of least resistance appears to be higher, towards $4,200 and beyond, as long as the current news cycle persists. A less likely scenario, with a 20% probability, is a sharp correction due to the overbought conditions or a sudden change in market sentiment. Watch for a break below $4,000 as a confirmation of this scenario. Keep an eye on the upcoming U.S. retail sales and PPI data later this week, as any signs of hotter-than-expected inflation could briefly strengthen the dollar and create some headwinds for gold. That wraps up our analysis for today. Please remember, this content is for informational purposes only and is not financial advice. Trading involves significant risk, and you should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next video.